Today, we're diving headfirst into the world of prediction markets. You know, these places where you can bet on pretty much anything, from elections to the economy. But here's the real question. Is it all just a big gamble, or can you actually use data to see the future just a little more clearly than everyone else?
So yeah, that's the million-dollar question, isn't it? Can you really find profit in predicting what's going to happen next? It's a fascinating idea, and today we're going to walk through a project that tried to find a real, data-driven answer to that very question.
Okay, so let's make sure we're all on the same page. What are prediction markets? Well, think of them like a stock market, but instead of trading stocks in a company, you're trading shares in an outcome, like who's going to win the next election, or what will the inflation numbers be next month. The price of a share in an outcome basically shows you what the crowd thinks is going to happen. But while the idea sounds pretty simple, this new frontier of data, it creates its own set of huge problems. It really is a market of the future, and that makes it incredibly tough to find your way around.
And this really gets to the heart of the problem. If you're a trader in these markets, you are just drowning in a sea of data, surrounded by this thick fog of uncertainty. There's information everywhere, but almost no clarity. So how on earth do you find a reliable signal in all of that noise?
Let's break down those challenges, because they're very real. On just one platform, you've got over 4,500 markets to keep an eye on. Any hidden patterns are buried so deep in the noise, you'd never see them. And those little arbitrage opportunities, the moments of basically risk-free profit, they pop up and then they're gone in a flash. For the average person, trying to make a truly data-driven decision, it feels next to impossible.
So, if you're lost in that fog of data, what do you need? You need a compass. And that's exactly what this project set out to build, a tool called PredictIQ.
Its whole mission was simple, but wow, was it powerful. Build an advanced analytics platform to bring some clarity to all that chaos, to literally be the compass that helps people navigate these markets.
So, how does this thing actually work? Well, PredictIQ is built on a few key features. It's got this unique market efficiency score, a correlation matrix to find hidden connections, interactive parameters so you can slice and dice the data however you want, and this is the really crucial part, a backtesting engine so you can test out your strategies before you risk a single penny.
And this is what makes these features so darn clever. That efficiency score, it tells you if a market is priced smartly or if it's way off. The correlation matrix, that's kind of like an X-ray, showing you the hidden skeleton that connects all these different markets. And the backtesting engine, that's your flight simulator. It lets you test drive a trading strategy and see how profitable it would have been, all without any real-world risk.
Now, building a tool this powerful was, as you can imagine, not easy. So let's pull back the curtain and take a look at the architect's journey, how PredictIQ was actually put together.
The whole process was like a 5-step quest. First, it started with pulling in all the raw market data with SQL, then using Python to analyze it all and calculate the important metrics. Now, step 3, that's where the real magic happened, using some heavy-duty statistics to model correlations and find those hidden patterns. After that, an interactive interface was built, which all led up to the final and most critical step, backtesting the strategy to prove that it actually worked.
But of course, no quest is complete without a few dragons to slay. The raw data was a total mess. It was messy and inconsistent. Coming up with a solid market efficiency metric was a massive challenge in itself, and you absolutely had to make sure the findings were statistically significant, to prove the patterns were real and not just some random fluke, all while trying to balance making the tool incredibly deep and powerful, but also easy for a person to actually use.
So what was the end result? Well, the creator put it best. This was about creating something that was impossible with traditional BI tools. This is real-time market intelligence, and it's backed by some serious statistical rigor. All right, so the compass was forged, the hurdles were cleared. Now for the really exciting part, uncovering the patterns that were hiding in that data all along.
Which, of course, brings us right back to our big question. After all that work, did the quest actually succeed? Was there some hidden treasure waiting to be found in that ocean of data? The answer was a resounding yes. And it all came down to this number, -0.847. This was the crucial clue. It showed a very strong negative correlation between a market's bid-ask spread, that's just the gap between the buying price and the selling price, and its efficiency. So in simple terms, the wider that gap was, the less correct the market's price was likely to be, which made it much more predictable.
And that single clue, that one number, it led directly to this, the hidden treasure, A trading strategy built entirely on that one insight, when put through the backtester, delivered a hypothetical return on investment of over 136%. Now that is the power of finding a true signal in the noise.
This whole journey into the data didn't just find a strategy, it revealed some really profound lessons about how these brand new markets actually tick.
So what's the single biggest takeaway from all of this? It's this, that bid-ask spread, it's not some minor detail for Wall Street pros. It is the single strongest predictor of whether a market is inefficient. It's basically the big, flashing red light that screams, hey, look over here, there might be an opportunity.
And this discovery paints a really clear picture. You can think of it as a tale of two markets. On one hand, you have the small markets, those with less than 10 grand in trading volume. They have the highest opportunity because they're way more likely to be inefficient. But they also have the highest risk. On the other hand, you have the big markets. They are remarkably efficient, which means much lower risk, but also far fewer obvious opportunities to seize.
And believe it or not, this journey is far from over. The future plans for PredictIQ are even more ambitious. We're talking about things like real-time arbitrage alerts, using machine learning to try and predict market moves, and even adding tools for portfolio optimization and sharing strategies with other users.
Which leaves us with one final, and I think pretty fascinating question to chew on. If just one person, working on their own, can build a tool like this and find a potential 136% return, what happens when everyone has a compass? Do all these opportunities just disappear as the markets become perfectly efficient? Or does it just raise the stakes and make the game that much more interesting for everyone involved? The future, it seems, is still very much up for grabs.